What up, everybody? And this is Chairman Day Jeff here in the building, and I'm going to talk about the trade that I took today. Today, I took a losing trade on gold, and right now I took sell on oil. Let me talk about the trade that I took on gold first, right? So the trade that I took here is basically pretty simple. I say, wait a minute, I want to open. I want to open the gold chart first. Wait a minute. The reason for me to take a short on gold is basically here, right? So I took a short here, and the whole reasoning is pretty simple. I took a short here. I believe I selling at the low, and I put my stop all the way up here, and then try to targeting the measure move down, right? Because we're in a very strong bear trend, we can see that, and then we break below this high time frame training range, and then um I'm seeing that okay, price pull up and then price continue pushing down, strong breakout. So I'm thinking that probably short will be a good idea. So I short at the possible lowest lowest price of the day, right? But I miss out something when I trade, right? So basically I forget there has a 20 moving gap bar, or say 20 moving average gap bar over there, which is this bear doji bar, meaning that okay, the bull is strong enough that put a bar completely above 20 moving average, meaning that the bear trend actually is not that strong, right? Compared to um the bar that always below 20 moving average, right? Because at that time bull are strong enough that to put a bar completely above moving average, meaning that the bear trend is weakening, and there may be a major trend reversal attempt afterward, right? So, and also you can see that we are late in the bear trend. Of course, there will be a high probability for it to become a exhaustion gap instead of a measuring gap, or say, and also the 20 moving average gap are there, even though we have a strong bear breakout. And there might be some problem of this breakout move, right? And you can see that it didn't reach one-to-one measure move target. And yeah, I think it's still reasonable shorting there. But I have to remember that there was the 20 moving average gap bar and bear trend is weakening. So we can see that we have a reversal up and that kind of like a trend range as well here. I think this trade is reasonable, and I managed my risk pretty quickly after I noticed that there's a 20 moving average gap out there. And then also I basically exit all my position above this bull bar after that the gap is being closed, right? So I basically exit everything above this high, and then initial my stop was here, and then I exit everything here, right? So I uh, took less losses than what I anticipated, right? And then let's talk about the oil short that I'm currently taking right now. I would say the oil trade, basically, wait a minute, the oil trade is pretty simple as well. You can see we're in a pretty strong bear trend, and then I'm just trying to short after price have a strong bear breakout, and then we can see that first leg up, second leg up, possible rejecting at the top of the trend range, big up, big down, big confusion, and then we can see that bull bar, micro double top failed to break above the range high, and then I took a short after I saw a bar close below this gap over there, and then also closing below 20 moving average, targeting 1 to 2 ratio. I believe this is a reasonable trade, and it's pretty good trade, not gonna lie, following the trend, short at top of the range, and then have confirmation. So I believe this is a good trade. If it's a losing trade, then it's a losing trade. But I'm going to um bed, right? Because tomorrow I have to get up early and go to work, right? So I'm gonna call it a day. Ciao.